It's insane thinking about the fact that I have actually made £10,000 worth of gains this year alone. August to August, I've made £10,000. If we look here, total return at the time was £4,005, and now we're looking at £14,248. Crazy gains this year. Let's hope it continues. I'm Alex, I'm 24 years old, and I've started investing about 3 years ago. This video, I'm going to give you guys a portfolio update, as well as some of the buys and sells that I've been doing last week, and then I will tell you what my intentions are for this week, what my buys and sells will be for this week. I'm going to run through all of my portfolio holdings just very briefly and show you my overall portfolio. So let's get straight into it. So I have two portfolios. One portfolio has individual stocks in it, and that's the larger of the portfolio, the one you see in front of you. And the other portfolio is full of ETFs, and it's much smaller, only 16,000. So in the individual stocks portfolio, we're looking at an overall value of 49,743. Hopefully this week we see it cross over 50,000 for the first time ever. I'll be so happy. It'll be such a moment. We'll see half of 100k. That's crazy. But overall portfolio value near 50k, total return 14,248, and the rate of return 118% essentially. On the right over here you can see my portfolio holdings in order of their weight. So we'll start it off with Hims and Hers being my largest position, £8,390 position with £2,900 in gains, which is a 53% gain. Now, I bought this stock around April time, so this is incredible performance since I bought the stock. If you were following the channel, you would have obviously seen what I was buying, and you could have heard my thesis at the time, why I thought it was undervalued. But yeah, it's doing incredibly well for me. If you want to go back and watch my videos on Hims and Hers, feel free to do so. My next largest holding is Amazon. Now, these two both make up about 16, near 17% of the portfolio each, meaning that together these two make up over a third of the portfolio. Amazon is at £8,256 position, and it has £1,778 in gains, which is about 27.45% up from my original buy-in price. Now, I haven't made a full video on Amazon, but I do think it's a great play, especially in robotics, and I think that AI will be a major booster for Amazon's sales, especially when it comes to its logistics business. Moving on, we have Uber Technologies. This was another large investment of mine that I made pretty recently towards the end of 2024. I put a large amount of capital in, about £4,000, 4,200, something like that. And Uber has done very well for me, up 35%, 1,464. Uber and Hims and Hers are recent purchases that have done really well for me. And if you're following the channel, you would have also seen my entry point on Uber. It was actually very low. Let me have a look and show you. I bought it on the dip here in December time, and it's done incredibly well for me. If you want to follow the channel, you can see what I'm buying and selling, and you never know, hopefully my returns continue to be good and the portfolio continues to outperform. Talking about portfolio outperformance, let me just quickly show you what's going on. So this is my portfolio versus the S&P 500. So I make sure to track that. Otherwise, I might as well just invest in an ETF. And at the minute, I'm actually outperforming the S&P 500 by about 17.57%, which is great. Obviously, there were some times back in 2023 where the S&P 500 was outperforming me. And recently, I have shot up through the Hims and Hers purchase, and Uber, I think, also gave it a nice boost here. And yeah, 17.57% ahead. Last time I showed you this, I was over 24% ahead of the S&P 500, but it's slowly catching up. So got to make sure to stay ahead of it, really put the due diligence in to stay ahead, and we'll see how long this lasts. Hopefully I can make it last many years, but we'll see. Moving on, we have a slightly more stable stock than Hims and Hers, Uber or Amazon, and that is S&P Global. S&P Global, if you haven't heard of them before, they aren't the S&P 500, they are the owners of the S&P 500. So they have the index business where they They take money on the assets under management within the S&P 500, and they also are part of a major duopoly in the debt rating business. S&P Global and Moody's, they rate debt, so they could give, let's say, the US government a AAA rating, allows companies and governments to take out debt, which is they need a rating to take out debt, so they have to have it, and S&P Global has a massive oligopoly in that area. So they're quite a stable stock. £4,116 worth of them, up £711, which is a 20.88% increase from where I bought in. Now, S&P Global has actually underperformed the S&P 500 since I've been buying into them. However, I do see further growth from them, and they offer my portfolio quite a bit of stability. During the Trump tariff dips, S&P Global barely moved, which was really good for me. And it keeps you sane when your portfolio is a little less volatile, especially as my portfolio is moving further and further into a highly volatile portfolio, with Hims and Hers being the largest position. Moving on, we have Texas Roadhouse. Texas Roadhouse is a restaurant in the US. It's moving globally now, but there is one in London, I believe. It is essentially a steakhouse in the US that does incredibly well, churns out 15% free cash flow growth year after year, constantly is expanding, and that's why I bought them, and they've done incredibly well for me, up 57.24%. My original buy, I'm almost up 100% on this position. It's just I've bought since, which lowers the average percentage increase. But overall, I own £3,953 worth of Texas Roadhouse, up 1,439, and 57.4%. Moving on, we have Netflix. Now, Netflix recently reported earnings, and I'll go over that very briefly here. And essentially, I have a £3,768 position with £1,616 in gains, which is a 75.11% increase. This has been my best buy, and they just continue to impress the market. Unfortunately, I wasn't making YouTube videos at the time, so nobody could have followed me into that buy, but I don't advise you follow me on any buys, actually. So I'm not a financial advisor. Look, there we go. Had to add it in, didn't I? As you can see here, they beat on their earnings per share. I can show the estimate only slightly. Not quite as large a beat as last time, where they beat by almost $1. They beat by about 10 cents this time. 10-12 cents. And then on the revenue, they beat again. They raised their guidance, primarily driven by the foreign exchange as the US dollar weakens and they make a lot of money abroad. The underlying business is stronger with better member growth, which is something that they don't release to the public anymore. They've increased their momentum in ad sales. Fun fact, Netflix's ad tier actually makes them more money than their subscription tier, even though their ad tier only costs £6 and their subscription tier costs, double, if not triple that in some cases. So it is good to see their momentum in ad sales increasing. Operating expenses largely unchanged. Now, this is incredible because one of the reasons I bought into Netflix is because of their really high operating leverage. And what that means is as they grow their top line, so their revenue, their bottom line increases drastically because their operating expenses do not increase. So higher revenue is flowing through straight into the profit margins. Anyway, that is enough of Netflix. Let me get back to the video. Moving on to MasterCard. MasterCard is another stable company in my portfolio. They do not drop too much when there's a big major event like Trump Tariff Day and I forgot what it's Liberation Day, that's it. I was definitely very liberated because I managed to buy into Hims and Hers at a really cheap discount and make a lot of money. So thanks Trump for that. That was good. MasterCard, really solid stock, just posts consistent 15% free cash flow growth for years and years and years. And it's a stock that is basically a toll booth on all payments. Why would you not get involved in this stock? It blows my mind that people don't think about MasterCard as a high-tech company. They are at the forefront of technology, encrypting payments and providing a platform for all transactions to be made on. MasterCard is a £3,361 position and £689, £690 in gains, which is a 25% increase from where I bought it originally. So MasterCard has done well for me. It's pretty much in line with the S&P 500 since I bought in. Now onto ASML, the only stock in the portfolio that's in the red. ASML is one that I continue to have conviction in, especially with the continued AI demand. I do believe that ASML, top of the food chain for the chip production industry, will be making some large profits in the future. I do believe they'll outperform from here. I do believe ASML is a buy, in my personal opinion. They are undervalued and they will outperform from here. Anyway, I have £3,326 in ASML and I'm down £241, about 6.76%. I recently made a video on ASML's Q2 earnings, and I go through why I'm still bullish on the stock and why I believe now is a decent time to buy. Moving on to Alphabet or Google. If you've seen any of my recent videos, you will know that I'm very bullish on this company, and I really have been buying into Alphabet recently. My position has grown drastically up to a £3,182 position, whereas at the beginning of the month, I think it was, don't even know if the position existed at the beginning of the month. I've made some decent profit in the short amount of time that I've held the stock. I have £3,182 in the stock and £229 of that is gains, 7.78% of the total. I'm very bullish on Google. If you haven't seen my most recent video, you should definitely check it out. It goes over the AI tech blunder and how Google is the hidden sleeping giant. I put a lot of effort into it, so yeah, make sure you catch that one. Moving on to Booking Holdings, Booking.com. £2,990 in this stock, £766 in returns, with 34.48% up from my original investment position. Booking is just so good to shareholders. They just give so much money back to shareholders. They consistently grow and they always buy back shares, which is great, which just means that their free cash flow per share is constantly very high, at a very high growth rate. Moving on to Visa. Visa, along with MasterCard, very similar things. I invested in both of them at the time because I couldn't choose, and I had a lower amount in Visa than I did in MasterCard. And yeah, £1,397 position, £338 in gains, 31% up. Moving on to the lower end of my portfolio, Meta Platforms. I bought this after the tariff dip, and Meta had just posted earnings, and I just thought these earnings are way too good, and Meta is definitely going to rise. So I bought into them after the tariff dip. £1,299, about £1,300 in the position. £243 of that being gains, 23.05% in gains in this position. I was very quick to make profit on this position, and I did consider selling it to put more money into Google, but then I thought, actually no, Meta is growing very fast and I do have a lot of faith that they will continue this growth, so I'm going to keep my very small position in Meta going. Don't think I'm going to add at these prices. I prefer Google, but yeah, I'm going to keep that for now. FICO, a very small position, £54 in it, more of a watcher position. I did have a larger position, sold out. How many times am I going to keep saying position is the question. Now, it's a good job I did sell out because I had quite a large chunk of money in FICO and they've dipped 12% from where I bought in. You can have a quick look here. Yeah, bought up here and bought down here and yeah, dipped. Then Salesforce at the bottom. It was a holding I bought into more than a year ago now. I did quite well on it at the time. I sold little chunks of it, took some profit, and eventually I've sold pretty much all of my stake in Salesforce and put it into other stocks such as Hims and Hers that has done really well for me, and Uber. So can't be mad there that I sold that, especially when it's only up 5%. Now moving on to my Invest Engine portfolio. This is my safety net really, with £16,000 in the portfolio. Originally only invested 10,370, so overall I'm up £516, which is 52%, which is quite good. So 12,000 of the portfolio is in iShares S&P 500, and then another 3,843 is in iShares S&P 500 Information and Technology sector. Now you might be wondering what this ETF contains, so I will show you. The holdings are basically just the S&P 500, but the technology sector. So Microsoft makes up a 21% position, Nvidia an 18.8% position, Apple 17.7. So yeah, Palantir as well, quite a large position in Palantir there, which I didn't realize. But yes, it's done me well. It's done me well, that, especially with its almost 100% return since I bought in, which is crazy. I mean, that's essentially a doubling of the money that I originally invested. Now, coming up next week, we have no earnings in the portfolio that I really care about coming out. But the week after, we have quite a big week with Visa, Booking, Meta, FICO, Amazon, MasterCard and S&P Global all reporting between July 28th and August 3rd. So this is going to be a big week for me. Hopefully I'm going to cover as many of these as I can, and yeah, we'll see. And then after that, even bigger week for the portfolio, considering that this here makes up near 50% of the portfolio. Hims, Uber and Amazon, that's like 45% of the portfolio there. Now I'm going to quickly talk about the trades that I made this week. So I actually sold a little bit of S&P Global at the beginning of the week. I sold about £428 and I bought into Google. I just think Google is highly undervalued. Like I said a minute ago, in my previous video, I did a valuation on Google and I showed where I think it should be priced at. I gave a price target and I said how much I believe it's going to grow from this price. I then did a similar thing on July 25th and I sold £411 worth of Texas Roadhouse. Now, I only recently made the purchase into Texas Roadhouse with some spare cash. If you're watching my channel, you saw that I had some spare cash when I sold FICO, and basically I wanted to put it into something. I don't really like to have cash sitting around, which I know a lot of people say that you should have cash sitting around. I personally just think keep your money in the market, especially when you have so little money in the first place compared to these big players with millions and billions like Warren Buffett. But I sold £411 worth of Texas Roadhouse and put it into Google at a price of $192 per share. So those were my buys and sells for the week. Looking into next week, this is my plan. My plan this week is to completely sell out of Visa. I know what you're thinking. That's very sad. You've had that as one of your earliest buys in the portfolio. And I know. But truth be told, I do just see more upside in Google at the minute. I don't have the cash to deploy myself into Google, and I want to buy it before the market catches on, because I do believe that in the short term Google might actually make quite a large move as the consensus opinion on Google slowly changes from one of a dinosaur, a dying company in the face of AI, to actually one of the leaders, if not the leader in AI at the moment. So yes, going to sell out of Visa. I will still, of course, have my MasterCard position. And from now on, I will probably just buy into MasterCard. I do see more growth in MasterCard than I do in Visa at the minute, especially as Visa has gone up further in price. And not only that, but MasterCard is growing faster in Europe. So we'll have to see how that turns out. But I think it will be good, and it'll increase my position in Google to about 4,500 really, which is where I want to be. I want to have a large stake in Google. It will be my fourth largest holding behind Uber, and it can actually make a large impact on returns if it is a larger holding in the portfolio. So that'll be it for this one, guys. I hope you enjoy. Have a good week, and I'll see you next week. Bye-bye.
I'm hopping out Ferrari. My house is 3 stories. I'm still independent cause Jive couldn't afford me. The meetings were boring. For real, I was snoring. The VP was fine, yeah, she treated me kinda corny. But that's another story. Let's get back to the topic.